Hello and welcome to the November Director's Cut, the September 2022 production numbers. And I'd like to introduce Mr. Lynn Helms. Go ahead.
Thank you, Jessica. Apologize for the sound difficulties. Occasionally technology just doesn't do what you'd like for it to do. Thank you to all my rowdy friends for tuning in today. To borrow from Hank Williams, Jr. We are doing September production, so that's the normal 2-month lag, and there's some really good news in the September production. For the first time since March of this year, we're back about 1.1 million barrels a day. So a little over a 4% increase in oil production puts us 12% above revenue forecast at 1,119,000 barrels a day, and a little bit more. 96% of that is from the Bakken and Three Forks. The oil prices also pretty strong. September oil price, North Dakota market price was $81.24. That's 63% of revenue forecast. So very strong numbers coming in for state and county revenues. Okay. Turning to gas production. Gas production, interestingly enough, was only up 2.8%, a little bit under 3%. So a short-term pause in that increasing gas-oil ratio, but I think when you see Justin's gas-oil ratio graph, you'll see that it continues to increase and it's on an increasing trend. Great news is that gas capture was very strong, 95% statewide, 96% in the Bakken, with record all-time high gas production, record all-time high gas capture. And so 2 new records for September. We're steady in terms of the number of wells permitted, so continuing activity or interest from our oil and gas operators. Low rig count today. A lot of that has to do with the storm that we had last week and the inability to move rigs. So some serious difficulties there. The 39 doesn't represent a trend based on the information we're getting from field reports. It simply represents a problem moving rigs and rigs actually active and turning to the right. Uptick in rigs operating on federal surface. And so people are getting drilling permits and actually drilling on federal surface in North Dakota. Our 39 to 45 rigs compares to 106 in New Mexico, so significantly more activity there. It's kind of interesting that the New Mexico July to August production shows a cooling off of their month-to-month record setting, but they did set a new record in August at 1.535 million barrels a day. Waiting on completion numbers down just slightly. So still probably 50% above what we would consider an inventory, a normal inventory of rig to frac crew delay. So there's still a significant number of DUC wells that could be completed as we go through the winter months. Inactive well count down significantly. So in September, a very strong month in terms of well activity. I don't think that'll be the case for November. I think we'll see a lot of wells down in order to accommodate gas capture as well as the winter weather event that we just experienced. So we'll be watching for what happens when November turns around. Wells completed, pretty good number at 54, a little bit lower than July, August numbers, but quite a bit lower than September. So 54 wells in October, 81 in September. That probably explains the nice production increase in September. In terms of producing wells, a new record number. And as you look at Fort Berthold activities, just pretty steady. When we look at crude oil inventories, U.S. and around the world, they're low. And so we're in for some reasonably high crude oil prices for the foreseeable future. And interestingly enough, natural gas is experiencing the opposite. U.S. natural gas storage is now just 2%, below the 5-year average, and natural gas prices have returned to a more normal level of about $3.56 an MCF. All of our gas capture numbers are up. We still have the 4 fields that are struggling to build out gas capture and to really get the gas capture happening. But even those numbers are up and improved. When we turn to the federal scenarios, I wanted to point out that on page 5 and page 10 of the director's cut, the Biden climate change agenda is alive and well. The Bureau of Land Management is going through a comment period on the social cost of carbon for a new EIS on permitting of wells that were leased in 2022. And the EPA is coming out with new methane control rules. And so the climate change agenda is continuing to ramp up the pressure on the oil and gas industry. We did have a few advanced questions that came in, and I'll take a shot at them. Justin may have a little bit more detail. One of the questions was, are we expecting a steeper or a production decline through the winter, given the rig count and the diminishing DUC inventory? And we think we're at a healthy enough rig count and frac crew count to maintain production, but we're not really expecting significant growth over the winter months. We think that we can maintain that 1.1 million barrels a day at rig count in the mid-40s and a frac crew count at around 17. But as much as North Dakotans pride themselves on being able to handle winter weather, that's not what we're seeing after last week's storm. Now, keep in mind that we had record snowfall, well, near record. It was the second snowiest day in Bismarck on record, and Mandan and to the west actually was even snowier. So when we look at the U.S. DUC count, it's coming down significantly. And so it's going to be difficult for the oil and gas industry based on leases and permits, drilling activity, and the DUC well count to really significantly increase production nationwide. And I think we're going to see a flattening in the Permian. I think we're going to see a flattening. We certainly have seen a flattening in the Bakken and I think in the mid-continent. So there's a lot of pressure opposing increased oil and gas production. So there was a question about severe winter weather. Yeah, absolutely. Justin has a technique to kind of monitor natural gas movements, and the natural gas movements as of last week with last week's storm indicate maybe a 50 to 70,000 barrel a day drop in oil production. That's assuming that we maintain the 94 to 96% gas capture, and that's what our operators tend to do. It looks like, we were at 1.19 million barrels a day in September. October probably was up a bit from that, maybe 1,125,000. It looks like for November, things are really weak and haven't really turned around yet at this point. So probably a 50 to 70,000 barrel a day drop from those October numbers, which should keep us just above 1 million barrels a day, but not much above 1 million barrels a day. It certainly is going to drop us back below that 1.1 million barrel a day number for the month of November. Justin's aware of some problems and some issues in the midstream and gas transmission areas, and I'll let him speak to that. But overall, very positive news for the state, but the anti-oil and gas pressure for climate change continues to ramp up in every area, every aspect, with challenges to leases that have been issued, no third quarter lease sale, no projections for a fourth quarter lease sale from the federal government, EPA pressure, and Bureau of Land Management pressure. So it's going to be very difficult for our industry to respond with significant production increases. That is all of the direct comments I had. Jessica, do we have additional questions?
Yes, we have a couple more questions. The first one is, if the EOR potential proves real in the Bakken, do you think its use will spread to other maturing basins?
Great question, and yes, I do believe that if the EOR potential, we've got 2 projects underway and a third one that's looking for partners and planning to get underway, some promising results. And so if that EOR potential proves itself up, like all the other technologies, I expect it to rapidly transfer to the Permian Basin, to the Powder River, and to the mid-continent. So technology transfer seems to happen at light speed these days. And so anything that gets developed in one of the basins, whether it's Eagle Ford or Permian or Bakken, transfers very quickly to the other shale basins. So I do anticipate that happening. Some interesting information coming out of the research at EERC that neither rich produced gas or CO2 seems to be the perfect fluid. It seems like a mixture of those two may actually be the optimum approach for enhanced oil recovery. So I'm expecting some of our projects to actually do some testing of that in the future here.
All right. Do you have any thoughts on the midterms and how they might affect production, federal leasing going forward?
Thoughts on the midterms. So, you know, I think a lot of people in the oil and gas industry and in the oil and gas producing states were hoping that we would see a different outcome for the Senate and a stronger outcome in the House that would have allowed Congress to put some pressure on administrative agencies to slow down some of this anti-oil and gas efforts, maybe even reverse some of it. So what we actually see, since, you know, it takes both houses acting on a CRA to overcome any kind of administrative rule, is that it's going to allow continued pressure against oil production and natural gas production in the United States, and that's going to slow oil production growth. Certainly in the Bakken, I expect it's going to hold it flat.
Okay, we have another question that just came in. There's a provision in Biden administration's methane regulation proposal, which came out last week, that addresses flaring. It will require owners and operators of oil wells with associated gas to implement alternatives to flaring the gas unless they submit a certified demonstration that all alternatives are not feasible for technical and safety reasons. What impact will that have on development in the Bakken? Would production be shut in while companies connect their wells to pipelines?
Well, that's a great question, and I have not gotten that far into the proposed rule to really do an analysis of that. I've been reading some of the high-level information, and I had identified the 4 areas in North Dakota where we have some flaring issues. So I would expect negative impacts on those 4 fields in North Dakota, which represent less than 10% of our production, but represent some serious issues. So the other situation that we have is we have all of our natural gas midstream has switched over to sweet gas processing, and we've got a significant amount of our legacy assets that are flaring gas right now. I think there's going to be pressure, and I know the NDIC plans to comment on the proposed rule. I think there's going to be a lot of pressure to exempt stripper wells from those flaring restrictions and requirements, since they're very small volumes, and maybe even to expand that stripper well category. Initially, you know, and the announcement in the rule change was that it was going to be an effort to go after the super emitters. And I think that's appropriate, and I think that that's where the focus should be. So I think there's going to be a lot of comments and a lot of effort to try to get them to back away from some of the very severe limitations on the low oil and gas rate producing wells and the stripper wells. So.
All right, that looks like we have one more question.
But if, you know, if those same rules and regulations apply to stripper wells, we're going to see a lot of wells go offline.
All right, I think that's good.
All right. Well, thank you everyone for your time. Come to North Dakota if you enjoy sledding or cross-country skiing. We'll turn it over to Justin.
Ready to roll? All right. Well, good afternoon, everyone. Justin Krinkstead, Director of the North Dakota Pipeline Authority. We'll get up to date here on what's happening in production in our neighboring states. If you want to just follow along and share that slide deck, if you would. No worries. So the one thing I'll comment while that table is being pulled up, Eastern Montana did see an increase in rig count activity. Lynn had mentioned North Dakota. Eastern Montana is up to 3 drilling rigs now. I don't have any evidence one way or the other whether those are rigs that had moved out of North Dakota, whether those are new rigs into the basin itself, which would be encouraging as well. But we did see an uptick on that side of the play. South Dakota, still 0 active drilling rigs south of the border there. When we look at the trend that we're seeing both in oil and natural gas and GOR, Lynn had alluded to again that a gas-oil ratio on the bottom tier of that slide, taking a look at, again, that upward trend. We have seen historically these upward downward movements, so nothing concerning where we saw the monthly decrease in the GOR. We're fully expecting and continuing to model and anticipate that GOR trend moving upward. On slide 4, taking a look at the Williston Basin oil and gas, or I'm sorry, the crude oil movements out of the region. The major shift being between crude by rail as well as the pipeline movements out. We did see a little bit of an increase in the crude by rail activity in the month of September relative to pipelines. We're still seeing limited to almost no activity of those barrels being trucked north. Historically, we've seen trends where those barrels are being moved up for marketing reasons, blending. That largely is not taking place, at least in the current time frame. We look at pricing around the U.S. This is, again, what the refiners were paying in the month of August. That's the latest data we have. Some continued shifts. We're seeing Pad 1 ramp back up. Historically, Pad 1 has always been the highest price. There was a several-month period where we saw some tightening between those spreads. We're now seeing those spreads widen back out to a more normalized level, and that may be one of the reasons we saw a slight uptick in that crude by rail, particularly to Pad 1 when we look at where those barrels were headed. So on a volume basis, somewhere in that 70 to 80,000 barrels per day is the current estimate for how much crude is leaving the state by rail car. And then the destinations on slide 8, taking a look at, again, slight uptick in those Pad 1 movements to the East Coast, and then Pad 5, 3/4 or roughly 75% going west. And I did see that there are some numbers out of California, so I may have mistakenly, there was a period of time where we were not seeing any North Dakota barrels moving to California. That has, we have seen a small amount of North Dakota barrels making their way into the California marketplace here in 2022. It had been a part of the marketing strategy. It had gone away for a period of time. And it looks like, again, very small barrels. When we look at volume-wise, we're still seeing the Pacific Northwest being the lion's share of where those Pad 5 movements are headed. And today's price spreads on slide 9. Again, Clearbrook's very strong pricing continues in that marketplace. Again, if you ask me what I think is contributing to that, in 2022, we've seen real strong synthetic crude oil pricing out of Alberta. Historically, synthetic crude oil is always traded at a discount to WTI and Brent. In 2022, because of some maintenance and some other things happening up in Canada, those synthetic crude oil barrels, they're a light, sweet barrel. They come into the Midwest through Clear Brook into the Great Lakes, the PADD 2 region. They compete very well against a Clear Brook Bakken barrel. And so as those synthetic crude barrels are stronger relative to WTI and Brent, we've seen the Clear Brook, North Dakota prices get buoyed as well. So it's been a rising tide lifting all ships there relative to light, sweet, and PADD 2. Again, slide 10, that's just the data behind my comments earlier related to movements north and south of the border between U.S. and Canada. Lynn mentioned this, a very, very strong gas capture in the month of September. Where we saw the biggest decrease in the amount of flaring was in wells that were connected. So that's that orange piece of the pie. The 1% has remained steady now for a long duration. We're going to continue to see focused activity on that orange piece, that 4%. Those are wells that are flaring because the pipe that's connected to that facility simply doesn't have enough capacity. We know now, heading into November, that winter's here early. This piece becomes increasingly challenging, particularly in the winter months. When you think about the natural gas liquids within those gathering pipelines, as the ground freezes and cools, those natural gas liquids have a higher tendency in the winter months to settle out. And so you have pipelines out gathering the gas that essentially get choked off because the liquids start pooling within that gathering system. So the companies are going to remain very diligent to get pigs. So daily, multiple times a day, they're running pigs through those lines to clear those liquids out to try and keep the gas flowing as more efficiently as possible. But that piece of the gas capture component does struggle and becomes more challenging in the winter months. And then again, this is just that longer term trend where now for 6+ months we've seen 1% from connected wells and that other piece that I was just mentioning. Good news, last month I raised a little bit of a red flag. I didn't raise it too high, but we were seeing more wells producing gas than wells capturing gas. We did see that flip-flop again in September, which was good. So I was hopeful that was going to be a short-term little blip, and it turns out that it was, but we continue to monitor that. Because again, if we start to see any type of trend where, for one reason or another, if the folks out in the field are not able to get wells connected as quickly as the frac crews are able to complete them, we start to see challenges real quickly. The EIA, their most recent oil price forecast, they are anticipating really steady, maybe slight growth out into the late 2023 time period. So that, again, bodes very well for a play like North Dakota. And so that's what we're using in our planning exercises for infrastructure development. When we look at wrapping that oil price into activity and production forecasting here for natural gas, again, we sit in a very good position today with our gas processing, but we cannot, I mention this every month, the folks are not taking their eye off the ball. We're continuing to monitor this and develop what new sets of solutions are going to need to be in place, because that time is going to quickly come where today's infrastructure will not be adequate to continue to keep pace with gas capture the way we have been. And so now switching gears to the transmission side of the play, we did see again, continued trends in that 70 to 75% of Northern Border's movements exiting North Dakota being Bakken natural gas. Some blips with some weather events taking place, but otherwise the trend continues. When we look at BTU discussions, we're still getting up closer to that 1100 level, but still not at a level that appears to be concerning or that may trigger discussions about what to do with BTU levels out of the basin. And so Lynn had mentioned a couple things. So November has been a tough month for a number of reasons. We had obviously the weather that Lynn was commenting on. Winter has certainly come early here. Typically we start to see winter challenges in that December, sometimes even out into the January timeframe. Those have largely begun here in the first half of November, which again, makes for potentially a long winter here in the state, and we're all looking forward to that. When we look at what's happening at St. Anthony, Late last week, there was an unexpected outage at that compressor station that reduced capacity on Northern Border by 243 million cubic feet per day. So you can see the restricted capacity on that. This slide, it went out around noon today. It was already outdated by 1 o'clock, so they have extended this out on another day. So they're not going to lift that force majeure until tomorrow. And then on slide 20, there was also planned maintenance at Glenola, North Dakota, which was going to impact capacity out of North Dakota. That has also been kicked 1 day further down the road. So they're going to wait until St. Anthony, the work at St. Anthony is completed, and then get on with the Glenolan component of it. So we're now going to have roughly a solid week of reduced capacity on that system out of the basin, which, again, being the lion's share of the movement on that system, certainly works its way back through the plants, through all the wells that are connected to those facilities. And so the gas transmission issues, as well as the weather, Lynn had put it very bluntly. It's been a rough start to November. If we can see some light at the end of the tunnel, we'll get through this. We'll get the wells and everything back online. We'll get through this maintenance period on Northern Border, and then right now some of the long-term forecasts look pretty moderate. Cool temperatures, but no major storms on the horizon that we can see right now. But again, winter has definitely started. So with that, Jessica, I'd be glad to answer any questions if there are any.
This one's for you, Lynn. If you want to take another one, I don't have any for you, Jessica.
Okay. Well, thank you.
Thank you. You want to come back up, Lynn, for one? Okay, it said Director Helms mentioned value natural gas being an area of expansion in North Dakota, and that there was a priority being placed on building infrastructure to move that to market. Are there any updates on projects aimed at increasing connectivity to bring North Dakota's natural gas to market?
So a couple of updates. Justin talked about them last month, the opportunity to reverse the Bison pipeline, and also, I can't recall the other pipeline to go to Wyoming? Grasslands. So there's a couple of, and Justin, do you know what the volume combined there? About a half a BCF, so about 500 million a day. Not a great market, but better than no market at all. So that's about 500 million a day. The projects that the Clean Sustainable Energy Authority is working with on value-added natural gas are still in the FEED study stage, and so nothing new to report there. I think when the legislature convenes and Clean Sustainable gives its report, there will be some additional information, so probably be January before we hear about gas to liquids, gas to renewable plastics, and we start talking about propane storage and some of those items. But there is some pretty good promise on the horizon for coming up with another 500 million a day of export capacity. So that will be very helpful in terms of extending, at least for a few months to maybe a couple of years, the area where we run into problems and start capping our oil production.
All right, well, I think that's all we have.
All right.
Thank you for joining us today.
Thanks again, everyone.